Okay, good morning. Good morning, Facebook. La Familia. Maybe you're watching this on YouTube as well. But guys, we are on this morning and I have a very special guest. This is Miss Nataki. She's one of my business partners, one of my teammates. And guys, first off, let me just say to you that when I was getting ready to do this little training, I was going to do it. And I was just going to, see if I could find someone who wanted to kind of, participate so I can walk them through this. And lo and behold, Nataki just hopped on my Zoom, right? Because she saw a post I made. I'm like, what you doing out here? She's like, well, you said you was getting ready to do a training. I'm like, yeah, but I had not procured anyone to jump on. She was like, well, look at God. And so she's right here. Okay. So we've got Nataki on, ladies and gentlemen. And I'm going to work with her through this process so that you can see this process and we make this as simple as possible. All right. So guys, what you want to do is make sure that if you're in a position where you can take some notes, I recommend you do that. If you're not in a position, then you definitely want to watch this and then go back and watch the replay, okay? Because it's going to be very, very important. And it's a simple thing. It's just that I think people need to wrap their brains around it, okay? So in case you guys don't know, my name is Tracey Walker. I am a currency trader, and I'm really on a mission to kind of help free more people financially, really primarily financially. But of course, with that, we have to teach some skills. And then, of course, from that, we're able to help people to have more of an emotional balance, more of a, spiritual balance, more of a physical balance, because when your finances are in order, it's like you're less stressed, right? And if you're less stressed, your physical body is doing what it needs to do, but also your mind is not focused on all the mundane things that you have to do every single day in an effort to go and get more money. So ultimately, if we can just show you how to get more money, then we could really help to start this momentum shift in other aspects of your life. All right. So we've got some people on here. Nataki, are you ready to kind of get this thing going?
I am, Tracey. Let's go.
Okay. So what I really wanted to do here today, guys, let me remove a lot of this stuff because I want to have it like, this looks kind of crazy. I know. What I want to do is I want to just make sure that we have the basics of things that needs to happen with the chart. Okay. So this is what my overall goal is. And then Nataki, I want you to tell me what it is that you would like me to do. So let's see if those two things fit in alignment. Okay. So overall, all I wanted to do today was just show people how to draw the simple support resistance lines. Okay. Simple support resistance lines, because that's where your money is. I mean, it's as simple as that. It's like if you were going to go from your house to your job, the job would be the destination, right? The job would be the destination. The destination would be equivalent to your resistance line. It means you're not going to go any further from there, right? Once you hit that job, your goal is to make money at that place, right? And then when you're done making money from that place, what happens? You bounce yourself back home, right? You just bounce. And that's what people do in life. They just bounce from home to work overall, right? Overall, you bounce from home to work, home to work, home to work every day, right? That's like a ball bouncing from the floor to the ceiling, the floor to the ceiling, the floor to the ceiling. Your goal in doing that bouncing and that act is to get money when you get to the other destination, right? It's kind of simple as that. Well, that's all we're really doing with the Forex market as well. Hey, Sila, I'm going to mute you because I could hear the background noise. Okay, but welcome. So that's all we're really doing. We want to identify our starting point and our ending point, and we're going to draw a line where we end. We're going to draw a line where we start, and all we want to do is we want to collect our money when we get to the other side. That's all we want to do. Okay, does that make sense?
Yes.
Okay, Sila, I know you're just jumping on here, but does that make sense to you?
Yeah, it does.
Okay, so conceptually, we're going to go up and down, and we're going to collect money when we go up. Sometimes we're going to collect money when we come down, and that's it. All right, so we need to identify how far up, right, and how far down we're going to go. All right, so this is, what's this, AUD, NC. Let's go to I'm going to go to Euro JPY because yesterday I did like 50 pips on Euro JPY and it was a really, really, easy thing. Okay. And I believe it was somewhere right up in here. 2-1, where do we get in at? Maybe 216, I think. Okay. So I'll use this as an example. Okay. So let's see, let's go here. Let's use this as an example. All right. Now let's go down to the 1 hour chart. Okay. So for those of you guys that don't know, simply the 1 hour chart, let me move this out the way. The 1 hour chart just means that each one of these candles, this green stick, this red stick, this green stick, each of these different sticks, we call them candles, it takes them 1 hour to form. So this candle right here, you can see it's still moving, right? And we've got 38 more minutes left in this candle. And that would make sense because it is 10:21 a.m. Eastern Standard Time. Okay, so this candle is going to keep moving until it's 11 o'clock. Once 11 o'clock happens, that candle is going to stop moving, just like the rest of these have stopped moving, and then a new one is going to form. Okay, so now what our job is really is to identify, we're just going to identify the support and the resistance. Okay, and if you keep the example in mind of what I'm saying in reference to you're going to work, you're going to home, you're going to work to going home, and all you want to do is get your money when you go to work. That's all you want to do, right? At the end of the day, that's all you're going to do. All right. So if we're going to start somewhere, then we want to end somewhere. And when we get to that ending place, we want to collect our money. Okay. So the key is to identify where we're going to start and where we're going to end. And we're going to put that in the terminology of support and resistance. Okay. That's it. Support and resistance. What is support? When you stand on the floor at your house, on the street, at your job, wherever, at your church, the floor, it's supporting you. If the floor were not supporting you, you'd fall through the floor, right? That's what would happen. You would fall through the floor. So obviously, if you're standing on something, there's enough foundation underneath it to hold you up. Okay. That's why it's a support. Now, if you look up and you got your ceiling above you, the ceiling, if you were a ball, if you were to bounce a ball onto the floor hard and it went all the way up and it bounced and it hit the ceiling, Nataki, when that ball hit the ceiling, what is it most likely going to do?
It's going to come back down.
It's going to bounce off the ceiling and come back down. That's because it's the reverse of support, right? It's a resistance. It's at the top. So the ball, the ceiling resisted the ball from going through. Now, if the ball was heavier than the ceiling or thicker or, weighed more, whatever, then you could throw it up and it might go through the ceiling, potentially, right? The likelihood is slim though, right? Unless you threw it a couple of times and it wore down the strength of the ceiling. So the ceiling began to get weak, it began to crack, and then eventually you might throw it up there and it'll bust right through, okay? So it's the same thing. So your resistance is supporting you like a floor. Support is supporting you like a floor, holding you up, and resistance is keeping you can't go any higher. You're bouncing off. So that's all the market is doing every day. It's bouncing up and down from these support resistance levels. The key as traders is that you've got to be able to identify these levels because those are usually the levels where you want to get in the trade to either go up to a resistance or get in the trade to go down to another level of support. That's really it. So the key is to identify these levels, okay? So now if you kind of just look at this with your eyes, you can almost see there are certain areas where price kind of goes flat, right? Just with your eyes, you can see that like right in here, right? This somewhere in here, this must be a resistance because it wasn't breaking through that, right? It kept hitting an area, bouncing down, going down, going down, going down. And then finally we broke through over here. Do you see that? Just raw eyes. You see that, Nataki? Okay. Then you can see we came here and then price went down. Then it went down, right? Some support. And then it finally broke through again, right? Then we went back up. We hit another level and then we kept going up, right? So we broke through this ceiling, right? And then what did we do? There was another level. So the idea is that with your eyes, you can just almost see it, but we want to make it even more crystal clear so that you can make sure that what you see is what you see. So the best way that I've been taught to do this is we want to switch our candle chart over to a line chart. Okay, first off, guys, the candles are showing us what the price is doing. So it's important. We want to see what the price is doing, but it's a little noisy, right? You've got wicks, you've got bodies, you got wicks at the top, wicks at the bottom, little candles, big candles. It's a little noisy. So what we want to do is we want to switch over. We want to switch over to our line chart because the line chart takes away the noise. You see that, Nataki? All of a sudden, all we have is a line, right? And all we're looking to do is identify where the line, if we're going horizontal, where the line chart touches at least two places. Okay, so let's just start down here. It doesn't matter where we start, right? But ultimately, let's just start right here because this is a good, we can see this is kind of flat right in here, right? So what I'm going to do is I'm going to come over here to my little tool and I'm going to grab a horizontal line. Guys, you can make this line whatever color you want, okay? I'm going to make it white because my background is black. So I just need to be able to see it, okay? Whatever color you want, all right? So if we come here and I just kind of place this line right here, I haven't clicked anything yet, but you see my crosshair. Nataki, just looking horizontal, do you see where the line chart, the line that the white line that's there, do you see how it at least touches that horizontal axis? Right? So I'm going to click, I'm going to put a line right there, right? So I can see, and I might keep it like right here. Well, more like right here. Okay, why? Because right here it touched it. You see that? Yeah. Right here it came down and touched it a little bit. Right here it touched it, but it went through it a little bit, but it still went through that line. Right here it came down a little bit below the line, but it went back up. Right here, same thing, right? Price keeps hitting this line, right? It'll go up and hit that line. So right at this level, this would be an area of support. Why? Because it'll go up, down, up, down, up, down, down, hit it and keep going up. It wasn't coming below this line. Okay. All right. So we've got one level of support. Let's go get another line. So all I'm going to do is really, I'm going to follow. If I look at this, Nataki, you see this line that's going up like this, or even this line that's going up where it's a big move, right? From this line, a big move up, right? From this line, a big move up. Okay. We're going to follow that line up, right? So I'm down here. If I follow this line up, it stops right here, doesn't it? Now, if I were to just kind of put my axis right here, I might have to go up a little bit, but if I plop the line right there, you can see that this is an area, right? Price hit, price hit, price hit, price hit. Now, because this area, didn't really touch that line, and I can see there's a lot of pieces above that, I'm really going to move this line up a little bit more. You can see that, like, this gave us a good starting point, but I can see that right more here, right, is a little bit better. Why? Because I've got the top of this line, the top of this line, the top of this line. Then over here, this is the bottom of that line, right? So right here, this is a ceiling. It can't go any higher. But then over here, it breaks above the ceiling, and then it's what? A floor, right? And look, it's a floor over here. So whenever you have an area that shows itself to be a ceiling at one point and a floor at another point, that's a major level, right? It's like a stair step. It's a stair step. It's like if you start on some stairs and you step on the very first step, usually what you're going to do is you're going to make sure, let's say you go into not say abandoned building, but let's say you're going into a house that you've never been in before. Maybe like I have a real estate background. So we would go into these properties and they needed renovations, right? So I wasn't familiar with the stairs. So if I'm going to step on a set of stairs and I'm not familiar with the stairs, when I take that first step, Nataki, what am I usually going to do? So I'm going to step on the stair, but as I'm stepping on the stair, what am I feeling for?
For the actual level of the stair. I mean, you don't want to misstep.
You don't want to misstep, and you want to make sure that the step isn't going to fall through, right? So you're stepping and you're feeling for support. So you put a little bit of weight on the stair. When your body steps on it and you feel like you can stand on it without falling through, what do? You pick up your other foot now, right? So now that foot that's on the step is a support for your next step. Okay, so now when I take my next step, I'm going to feel for support there too, right? But my previous foot now can come off of that, right? It can come off of that, and now I can step up to another step. So it's nothing more but like I feel for support and I go up another level. I feel for support and I go up another level. So right here, it's like, okay, so I come up, I take my foot up, I step on the stair. When I step on the stair, I feel their support. So what can I do? I can keep going up, right? I can keep going up. And if I come back, I can step on this stair again. I can step on this stair again. And all of a sudden, right, I stepped on the stair and what happened? Uh-oh, I kind of went through the stair, right? So what did we do? We broke through. We broke a level, okay? However, what this is telling us is that we still have a strong ceiling because it took us a few times to bust through that ceiling, right? And then it took us a few times to bust through the floor. So whenever you have a ceiling that's also a floor, like in an apartment building or the second floor of your house, right? Your kitchen is usually on the first floor. When you're in the kitchen, the ceiling is the ceiling. But if you go up the stairs to the second floor, maybe your bedroom is above the kitchen. I don't know. When you're in your bedroom, that's now a floor. So that's a major support resistance level. Same thing in the market. When you have a ceiling that's also a floor, it's a major level. And we like major levels because major levels are usually points of what we call reversal, right? Where price will reverse. And if price is going to reverse, isn't that good for us if we want to buy something or sell something? Okay, so let's just keep going. So we've got another, right? So now we're here. We're on this support level. What are we going to do? I'm going to go all the way up a little bit, right? I can come all the way up here if I wanted to, right? But if I come here, I'm missing some levels. So I might come down to right around here because I need at least 2 points. You can't, like this is one. As far as from what we can see visually, that's 1 point. 1 point does not make it a support resistance level. You need at least 2. So that means I have to come down, right? Come down. So even if I came down to right around here, Nataki, can't you see that if I put a line, I've got 2 points touching right here, right? I even have a little bit here and a little bit here, right? So sometimes now this becomes more of an art, right? Because now what you see as 2 points, I might not see as 2 points, right? I might want to move this level here. Okay, is that wrong? Not necessarily, right? But you might want to move it down here, right? Okay, that's fine. It's still the general vicinity. It's still the general vicinity, okay? Great, so we've got that going. Now, let's go. Let's grab another line, all right? And I'm just getting major lines right now, right? There's always, there's lines in between. Like we can go here, right? But right now, let's just follow the major swings, right? All right, so then we had this line here. This was really like a resistance, right? Price was trying to break through, but it didn't break through to here. You see that? It didn't break through to here. So then when it broke through here, where did it go? Well, right around here. Why? Because here we were a ceiling, but I can see over here we were a floor. When you have a ceiling and a floor, it's a major level. So that's going to be a level no matter what. I don't care what. If you have a ceiling that's now a floor, or a floor that is now a ceiling, it's a major level. Put a line right there. Okay? You put a line right there. All right, so let's come down a little bit more. Let's go up a little bit more. So now we've got this level. Okay, so now if we come up, we can see price started to kind of top off somewhere in here, right? So if I come up to the top of this, I might put a line there. Why? Because I can see it touches here and we're touching right there, right? Fine. Does this starting to make sense? Do you see what I see?
Yes, I do.
Okay. All right. So now we had this level right here. We had a ceiling. We broke through that ceiling. And now look right here. See this right here. I'm looking at this, but if I look to the right, I can see, boom, a floor. Now this is a ceiling. So price was starting to come down, right? If I have a ceiling that becomes a floor, obviously I'm going up the stairs, right? I'm going up the stairs. If my kitchen is my ceiling and now I go to my bedroom and that's a floor, I went up the stairs. Right. But now if I'm upstairs in my bedroom right here and it's the floor, and then I come down to the kitchen and now that same thing is the ceiling, I must have come down. So now we're looking at say, okay, look, price must be reversing because what once was my floor is now my ceiling. What once was my ceiling is now my floor, right? You got that?
I got it.
Okay. So now I'm just going to leave it like this for the time being. Okay. This is good enough. For the sake of, this is a line, yeah. This is good enough for the sake of what we're trying to do, okay? So now I'm gonna come back to my candles and watch the magic. This is the magic of it all, right? So now we're gonna come back to our candles and look what happens. Now we have our support resistance levels drawn. Okay, we have our support resistance levels drawn, that's it. I'm not moving anything. I mean, you could move some stuff, but I'm going to leave it the way it is. Why? Because the line chart gives me everything without the noise, right? And that's what I want. I want to know clear. And the line chart also does not pick up wicks, right? The line chart is giving us the points where price was, not the point where price went to and came away from, but where it closed at, okay? Where it may have opened and where it closed at. So I want the true indication of where price opened and closed at. So when I come back to my candles, I'm going to leave everything alone. I'm going to leave it alone because I can see that these are the areas where price most heavily opened and closed at. There are going to be some areas where price closed above or closed below. Nothing's going to be perfect, but more often than not, price opened and closed on those lines, right? So now what happens? Well, what happens is we were getting ready to do a Euro JPY, right? We were getting ready to do a Euro JPY sale. Let me see. I can't remember. Oh, wait, I know. Let me go back to here because this came back on one of the tools that we have here at IMAIL, right? So let's see. I think it was this Euro JPY sale. So it was 127117. So that signal came out, right? That signal came out 127117. So what I'm going to do is I'm going to take another horizontal line, but this time I'm going to make it yellow, right? So I don't confuse it with support resistance from that standpoint. 127117. Okay, 127. So this is where the system told us to sell at. Okay, it told us once price, so price was up here, and it said once price gets to here, I want you to sell. That's basically what the signal said, right? So I put a line there, right? And I waited until price got down here, right? I put a sell in at this point, right? And when price hit my line, then it triggered my sale, right? So now here's the key. The tool doesn't tell us where to get out. The tool just says where to get in, which is great. But now, Nataki, you got to figure out where to get out. Okay. So now we've already got support resistance drawn on this chart, right? Now you get to choose, Nataki. There is no right and there is no wrong. Here's the way that I approach the market. I trade in levels, right? So from our starting point down to this line is a level. From this line down to this line is a level. From this line down to this line is a level. From this line down to, you understand what I'm saying? Each line, I'm going down the stairs. Here we were coming up the stairs, right? Now I'm going down. So now I'm saying, okay, I want to go down. Now, where do I want to go down to? You get to make that decision. Okay, so what you could do ideally is you could look at this and you could say, okay, if I'm looking at this chart right now, we put these lines in right here, but really these lines are going to also, I'm going to go up a chart to the 4 hours so we can see more candles. Okay, really these lines are going to tell us a story from the past too, right? The lines aren't going to change that much. We're over here, but if I look over here, I can see that the prices are still following the levels inside of the same lines that I drew from over here. Right? You see that? Okay. So now if I'm going to get in right here, Nataki, I could very easily get out at this line right here and be done with it. Right? Now, why would I get out right there? What justification would I have that price is going to stop right there and potentially reverse or continue down? Well, now that's why we have to start looking to the past. We got to see at this line right here, what did price do? Well, price kept going down at this line, didn't it? Or this line right here. So if I'm going down and I get to this line over here and I look left and I look, what did price keep doing? Going down. So I might want to get out here, but I could potentially stay in, right? Okay, so let's say I stay in. What would my next target be? The next line. And then if I look over here at the next line, what did price do? It kept going down. You see that? Okay, so now, huh?
The light bulb is flickering.
Yay! Light bulb, light bulb. Okay, all right. So now I'm here. I could still keep going, right? So now if I look though, Nataki, if I look that next level down, Nataki, that next level, I can see something right here, right? Looking this way. If I look real carefully, I can see that this candle right here, this wick, even though price kept going down right here, when I'm looking around, I can see that this was also a resistance level. You see that? See those two green, right? So it went up, fine. And then it came back down. Then it broke above and then it came down. But really, when it hit this level and right here, Nataki, what did it do?
Looks like it went back up.
It went back up, Nataki.
Yeah.
So if I were going to be in a sale, and if I were going to take it down to this level, this would probably be the last level that I'm going to keep going down. Why, Nataki?
Because we see right here where it reversed. So it's not seeing in the selling trend. So that would be a good place to get out.
To get out. Now it could turn around the top. It could keep going down. We don't know, right? It could keep going down. Okay, great. But we can see that right here, it went up on us. Well, if we're going down, we don't want to lose all that money we just made. So isn't it better than to guess, just get out? Just get out right there, right? Or you could have just got out right here too, right? Now, that's what I'm saying. You have to analyze it. So as you're looking, that's what you're looking at. That's what you're looking for. Do you see what I'm saying? Okay. Now, let's measure though. Let's be realistic about what it is our goals are. Okay. So let's say your goal, how many pips per day would you like to have?
10 to 20 pips would do me well.
10 to 20 pips would do you well. So regardless of everything else I just said, we're going to measure from where we get in down to each level. Okay. And once we realize we could have 10 to 20 pips, you're going to get out right there. It don't matter about anything else. Get out when you get your goal. Okay. So let's grab our little tool over here, which is our price range. And we're going to start at our yellow line because that's where we got in at, right? So if I take this and I come down to my first line, how many pips is that, Nataki?
15 pips.
Could you get out right there?
I could, yeah.
And be done?
I could.
All this other don't even matter, do it?
Not at all. Unless I'm greedy.
Unless you're greedy. Now, what happens, Nataki, when your greed factor kicks in?
You blow your account.
You're trying to hold on too long, right? Oh, it's dropping. It's falling from the sky. Oh, my God. I got to get all these pips. But your goal was 10 to 20 and you got 15. Why not just get out? Okay. But let's just say you wanted your full 20. Okay. So 15, Nataki, wasn't good enough for you right now. 15 wasn't good. So you analyze this a little bit longer, right? And you look and you say, okay, could I go down one more level? Right. And you say, okay, this still looks good. There's no reversal here. Right? It's no reversal here. So I could probably come down one more level. If you did that, then let's take this line and drop it all the way down to right there. Nataki, how many pips is that?
That is 34 pips, and I'm definitely out. I'm going to get them and dip.
Okay. So you're done. So all of this other stuff that it's doing right now, it doesn't matter, right? It doesn't matter. Now look what it did though. You would have got out right here, right? Price kept going though, which is fine. And then it did what?
It reversed on it.
It reversed. So if you hadn't have gotten out, not only would you have lost your 34 pips because you're trying to get 60 pips, right? Well, because if you had to put it there, you probably would have got it because price went through that line, right? But if you were not paying attention, if you do not have a take profit set, if you don't have those things inside of your trade when you start your trade, then you could have hit this line. You could have gotten 60 pips, and then you would have went all the way back up to 15 pips. Right. And then you would have had to wait to come all the way back down to 60 pips again. And this is a 4-hour chart, Nataki. So you could have had your 60 pips. So we started here, right? So this essentially was a 4-hour mark. This was 12 hours, 8 hours, and then 12 hours. Now in 12 hours, right, when you first got in this trade, you could already see what your take profit could be. So you could get in the trade right here. You could set your take profit for 126504. Couldn't you have done that, right? And I'm going to show you how to do stop loss in just a second, but you could have set that. And could you not have gone about your life and went to work and did what you had to do? You're not staring at this chart all day, Nataki, are you?
Right.
Okay, you're not. But if you did not put that take profit in there, that's going to now cause you to watch this trade all day, isn't it? Because you don't know where to get out. So you're guessing. So now you're glued to your phone or to your computer trying to figure out when to get out. And then when this thing starts pulling back like this, now you're getting nervous. Now it's going backwards. Now when it comes up here, you lost all of that. You get nervous. You close out at 15 pips, but you could have did that 8 hours ago.
Right. Okay.
You just wasted a whole work day when you ain't have to because you ain't know how to draw these lines. So really, 15 pips would have got you over your 10 pips, right? But almost to your 20 pips.
Right. Okay.
34 pips or 34 pips would have got you all the pips that you wanted. So your ideal thing would have been to come in here, get in this trade, go to your line chart, draw your support resistance levels, and then identify where your take profit's going to be. Okay. Now, here's what I'm going to say. Here's what I'm going to share. Okay. An easier way. So first off, let me say, do you understand how the levels work and how you can identify your take profits?
Absolutely.
Okay, perfect. Now, let's just say that you were going to be in this more long term, right? More long term. You weren't going to do zone to zone. You were just going to wait until it got to a certain point and then reverse. Okay. What we can do is go to what we call the previous level of support. right? So in other words, if we're going down the stairs, we want to know the bottom stair that we can hit before we start turning around and going back up, right? We want to hit the previous level of support. So if we're coming down, look left, Nataki. See over here? We're coming down, right? From over here, this whole area, we're coming down. And this area is where price went all the way back up. This was the lowest place we could come previously, right? We're over here in real life, but we have to see what price did before. So we have to go back in time. And if we go back in time, we can see that before, when price was coming down from this level, the furthest it came before it turned around was right in here. Okay. So ultimately, Nataki, even though this is our main level right there, and price did come there, you see that green wick did come there. You could very easily, Nataki, put, I'm gonna make this green. You could put a green line, which is kind of like a take profit, like I like to call it take profit, like right in there. Why? Because over here, this was the lowest that price was at. I'm not looking at the wicks. I'm looking at the candles, the price. Okay. So I'll put a line right there. Now, if I look, I can see, okay, this was a level. It kind of resisted, right? So it's a floor right here. It's a ceiling right here. It's a ceiling right here. We broke through and it was a floor right here. So I can expect that price coming down from the same area will probably come down to that floor. Okay. So long term, this is a 4-hour chart, maybe a few days, right? A few days. It ain't going to happen in a day because we're only, each one of these candles is 4 hours. This is already a few, 2 days, right? So over time, Nataki, couldn't I set this trade and just let it come all the way down to here? Right. Okay. All right. Now, if I did that, Nataki, how many pips is that? Can you see it?
Okay. Oh, wow. 125 pips.
125 pips. That ultimately you're not looking at your computer all day, are you?
No, not at all.
You just know where to draw the lines.
Okay.
If you don't know where to draw the line, Nataki, you're going to be nervous every day. If you know where to draw the line, then you just let it do what it's going to do and you're going about your life. Okay? Does that make sense?
Absolutely. Wow.
Okay, so we're drawing these crazy lines, and this is where we're going to get our money. We can. So the thing is, it's an art. Do you have to wait to down here? No. Could you take your money at this level? Yes. Sure. Could you take your money at this level? Yes. Could you take your money at the level it's at right now? Yes. Because look what price is doing right now. What is it doing? It's stalling right there. Why? Because price it struggles when it's going through a support resistance level. And that's why you want to get out or get in right there. It's a level. So
the consolidation there.
Correct.
Okay.
Right. A little bit of consolidation, like it'll go up, right? It'll go up. Okay, fine. So this isn't really consolidation right here because it's just a level that it's retesting. Okay. Right. But this is consolidation where we're getting out. Exactly, right? Like, look at this right here. Look how many hours price just could not break through this area, right? Over here, look how many hours this is. 4, 8, 12, 16. Well, let's see. 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 times 4 is what? 36? That's 2 days, a day and a half. Yeah. A day and a half price is still hanging out at this level before it finally bounced off. So this is consolidation, which is why you could bring your price or bring your take profit down to here. So you could get out at either one of these levels. You could ride it all the way down. You can look at what your trading plan says and get out where it makes sense for you to get out with your trading plan. Okay. It could be a short time. It could be a longer time. It doesn't matter. It just depends on your style of trading and what your overall goal is. Okay. So now, this is where we get in, right? Right here. So this is on the 4-hour chart. So we identified where we're getting out on the 4-hour chart, because essentially when this signal came out, it told us it was a 240 minutes. It told us it was a 4-hour signal, right? So we're looking at the 4-hour chart to give us the data on the 4-hour trade. Okay, that's why we drew our lines on here from this standpoint. But if I go down, because now what we're looking to do, now that we know where to get out, these are our take profits, we want to initially set a stop loss, don't we? Because if price goes the opposite direction, we don't want to lose more than we stand to make. We want to have a lower risk with a greater reward, right? Reward is what we can gain. Risk is what we would lose. So to tighten up our risk so we don't risk so much, could you come here and put a stop loss here? Now here's the rule. The rule is wherever you get in at, since we're going down, you want to put your stop loss at the previous high. Okay. Right? If we were going up, right? We were coming from here going up, we want to put our stop loss below the previous low. Okay? So if we're going down, so this is the highest point. We believe it's going down. So logically, if price comes up and goes above where it was previously high at, then it possibly would be going back up, right? Because an uptrend is higher highs. I don't want price to go higher than the previous high. If it goes higher than my previous high, then it's creating a higher high. And we're going down the stairs. So we want lower highs. We don't want higher, we want lower. So to safeguard, you could very easily come in here, I'm gonna put a red line, and you could put your stop loss like 3 to 5 pips above this high. So this high might be roughly 127.503. I might put it at 127.553, right? Or that's it, good enough, 555. Just at least 3 to 5 pips, because sometimes price will come back and test that area, like right here, right? See this down here?
Yeah, I see it.
Price could come back and test an area right here. See these 2 lines?
Yeah.
So if I were going to be going up right here, price, that red candle came back down and touched my line, it would have taken me out the trade. But if I'm at least 3 to 5 pips down, it would not have taken me out the trade. And it still would have let me go in the direction I wanted to go in. So you don't want to put your stop loss exactly at the same high. You want to give it some room where it makes it higher, right? If it's the same high, that's not a higher high. A higher high is literally higher. So we want our stop loss to be higher because that would indicate that price went higher than the high that we had before. Does that make sense?
Yes.
Okay. So now this is on the 4-hour chart. Okay. So this is an option that you have. Now, what we need to do though is measure the amount of pips. Okay. You can put the stop loss there all you want to, but you need to, just the way we measured our take profits, let's measure what our risk would be. And if the risk is too high, then we got to change that. Right, Nataki? Yeah. Okay. So let's calculate that. So from the price we would have got in at to potentially the stop loss, Nataki, how many pips is that?
43 pips.
Okay, so if you knew you were only going to go 15 pips, would it make sense to potentially lose 43 to gain 15?
Not at all. That
wouldn't make any sense. You should not do that. Okay. Right? So if you were going to go 34 pips, Nataki, would it make sense to potentially lose 43 to gain 34? No. Mm-mm. You always want to be able to win more than you lose. If you're losing more than you win, that's what people are doing. They're only trying to get 20 pips, but their stop loss is 40 pips. So you keep losing more out of your account than you would have stood to gain. And that's not a good risk management, right? Okay, so let's say you wanted to come down to this line and get you 60 pips, Nataki, would you be willing to lose 43 to get 60?
No.
So now this is just where you have to gauge it, right? The idea is this: as long as you gain more than you lose, you're okay.
Okay.
But you still get to decide. Like I can't count Nataki's money and say, no, Nataki, yes, you should do that.
Right.
I'm just saying to you that overall, if I could spend 50 cents, but I make 55 cents, isn't that still good?
A little bit, yeah.
Right? I mean, as any profit is profit, right? Now, would I prefer to spend 50 cents and make $1? Yes, absolutely. I would prefer that. But if I only made 5 more cents, didn't I still make money?
You did.
I still, and you got to be okay with that. Like, that's the problem. Everybody want to only make $1. And everybody's forgetting that making 5 cents here, 20 cents here, 30 cents there is what compounded interest is. That's what's helping you grow your account little by little. If you're trying to get the big kahuna, I want to double my account, $50 to $100, you're missing all the opportunities to make $5, $10, $30 and grow the account to the $100 too. Like, not one is not wrong. It's just you have to consider that it's not bad to make $10, you know what I'm saying, along the way.
Sure.
So technically this is okay, right? Technically this is okay. You want to consider this. You want at least a 1-to-1 ratio. 1-to-1 meaning the number of pips that you would lose is equal to the number of pips you would gain. So if I'm willing to lose 43, I should be at least gaining 43. Okay. 1-to-1. Now, as you get going and if you don't like that, then you can change that, right? You might have a 1-to-2, which is for every 43 pips, I want to gain double, right? So I want to get 86, okay. Right? So 1 would be 43 because that's equal, but times 2 would be 86. So I'm willing to lose 43 to get double, right? Okay. So if I knew I was going to come down to this line right here, right, 93, and I can see that that's still a good area, right? This is probably the last area before I would expect a reversal, right? Then that would be a 1-to-2 ratio. Let me mute Kim then. Do you understand what I'm saying?
Yes, I do.
Okay, so 43 I could lose, but I would be gaining 86, but I'd be gaining more because it's 93. So that's okay, okay? But here's the deal. You only looking for 10 to 20 pips. So this discussion don't even really matter because you're not getting ready to risk 43 pips. Right. Okay, so what does that mean? That means that we need to go down a couple of time frames, right, to find our stop loss. We can't do a 4-hour stop loss, because the 4-hour high is too high. Okay, so let's come down and say to a 15-minute. Right now, here's our entry, the yellow line. Right. Okay. Now, the previous high on the 15-minute would be more like right here, Nataki. You see that? Yes. This was the previous high on the 15-minute. Okay. So what we could do is we could bring our stop loss down to here, right? So what is this? This price is like 12728. So 28, 29, 30, 31, 32, 33. So 127,337, right? Okay. So let's just say 336. That's like 5 pips. So now this is still a higher high though, right? Yeah. Okay. So what we're saying at this point is that if price turns around and comes up past this point, potentially we could be going higher, right? Potentially we could be going higher. But now we've tightened up our stop loss, haven't we? So let's see how many pips that is on the 15-minute. Okay. Now we're only 22 pips. You're closer. You're almost 1-to-1. Okay. So, you know, yeah, you're almost 1-to-1. right? So that's an executive decision you could make. Executive decision on Nataki's money. You are the financial manager. You can say, well, shoot, I only want 20 pips. Am I willing to lose 22 pips to potentially get 20 pips? Decision you got to make.
Right.
I can't tell you, you know. Now, looking at the way that this is working, you know, you got to look at your trading plan. You told me I want 15 to 20 pips every single day, right? Like, okay, well, guess what? This line right here would only get us from here to here, only got us 15 pips, right? So if I wanted 20 pips, could I go to my next line? Yes.
Yeah.
So now you might say, does it make sense for me to go down to 34? Right? When I know 34 is still good, right? Right here, we can see a little reversal right here. 34 is still good. And risk 22. Would you do that?
I would.
You would. So what would you do? You would now enter the trade at the same point. Your take profit would be 126,771, and your stop loss would be 127,336. That's it. That's it. That's all we got to say about that, as Forrest Gump used to say, right? I mean, there's nothing else to say about that.
Right.
That's it. The lines matter. The lines are everything. Like the lines are everything. The lines are everything. Now, could we do a whole bunch of other stuff like Fibonacci and measuring and all these things? Yes, we could do all of that. But the core of what is happening is on the support resistance. If you can at least nail down and practice drawing your support resistance, right? Identifying previous levels of support, right? Previous levels of resistance, so that you can identify where your take profit would be. And then you turn around and say, well, where's my previous high? Or where's my previous low? And then, hold on one second. That's my sister calling me, and she on my face saying, okay, where's my previous high? And where's my previous low? Now you can come up with your stop loss. If your stop loss if it's a 1 hour trade, if the signal is called on a 1 hour trade, right? If you're doing bounce back, if you're doing a harmonic scanner, it's in a 1 hour scan or a 4 hour scan. Or if you're doing swipe trades, right? And they say it's a 4 hour signal. Then you go and you look at the 4 hour chart and you draw all this stuff, and your previous high, your previous low for your stop loss is too high. You cannot put your stop loss right there. You got to come down a couple of time frames, look at where your entry point would be, and then find the previous high at that point, and then measure and see if that gives you a good risk to reward, a good 1-to-1 or less risk to reward, right? We want a 1-to-1 is like 1, but then less than 1 is point something, right? We want a risk to reward that's 1 or less. You don't want a risk to reward that's like a 2, because that would mean that for every pip that you're willing to gain, you're willing to lose 2.
Yeah, I'm over leveraging. I got it. Okay.
That's why people say I take 1 step forward and 2 steps back. That's what this is. Why would you want to go 1 pip forward and then take 2 steps? But that doesn't make any sense. Right? If anything, you want to go 1 pip forward, 1 pip back, 1 pip forward, but at least you're okay. But 1 pip forward, 2 pips back, we ain't doing that.
Right.
But if we could do 1 pip forward, a half a pip back, 1 pip forward, a third pip back, right? We're going forward and we're not losing as much ground, even though we're still moving forward. We're going back, but not as fast as we would be if we were doing this ridiculous amount of high leverage. You understand?
I got it.
Okay. Hopefully everybody that's watching this understands what this is too. Now, what I'm going to do is I'm going to open it up. I know the time we've been kind of walking through it, but Kim jumped down here. Kim, do you have any questions about this? Does this make sense to you? Is there anything that I can clarify for you? If you're still listening, Kim, because you're on here, girl. So I'm assuming Uh-oh, hold on. Let me turn this down. I'm assuming that you wanted to be in a circle right here with me and Nataki. So is there anything I can answer for you? I'm looking at the comments too, by the way, while I'm doing this. Okay. All right, maybe Kim is good, Nataki. Maybe Kim is good. Okay, those of you that are watching on Facebook, if you're watching this live, or if you're watching this like on the replay or something like that, if you're watching on the replay, you'll need to put #replay and then put your question in. Okay, so I'll know it's a replay and I can come back in and answer it later. But if you're watching this now, do you guys have any questions about what I just went over? Guys, this is not hard. This is not hard. Some of y'all willing, this is what I'm saying. Some of y'all are willing to go back to college to pay $20,000, $30,000 to go back to college to turn around and make an extra $5,000 at your job. That's the same thing of what we're saying. You're willing to go into debt 20 more thousand only to get ahead 5 more thousand. It would take you 4 years doing what you're doing to cover the cost of what you just spent. That doesn't make any sense. When if you can go to school and learn something for $200, Nataki, if you could learn something for $200 and you could turn around the very next day, Nataki, and make $100, for example, right? And then maybe that next week, let's just say, make another $100. And then maybe that next week, make another $50. Isn't that still better, right? Because at least you've broken even and you've covered your cost. Guys, in business, in life, in real estate, in your job, in your time, in your anything, you are making investments. And if you haven't figured out yet how to get more out of whatever it is that you're doing than what you're putting in, you're missing the whole boat. That's why people will say, don't waste your time. Right? Why? Because for me to sit here and do this, I may have spent, I don't know how long we've been on here, a little bit of time. I don't know, maybe an hour or so. Let's see, 10, yeah, probably about an hour. Okay. So if I'm going to invest an hour of my time, my intentions in doing that is to plant a seed in Nataki, into Kim, into you. You're watching this. I'm not wasting my time. I'm planting seeds into myself and everybody that's absorbing this information such that what? You turn around and multiply the growth. Now, if we can all multiply the growth, how is this a waste of time? It's not, because everybody wins. This 1 hour I spent, if I help Nataki make another $1,000, that's good for Nataki. It's good for me too, because she's on my team from a leverage standpoint. That's good for her. That's good for me. That's good for her, right? But if I sit here and then Nataki don't do nothing with what I just taught her, now I did just waste my time, right? And that's what aggravates coaches. That's what aggravates, teachers, is when your intention is to plant a seed to help someone grow and they squander. They squander. And this is what I'm trying to do. I'm trying to show y'all how to make this money with an intention that you excel. If you don't want to excel, I can't help you, but there are people who do. So I know that this is not a waste of my time. It's just in this market I'm in, there are people that want this information, whether you want it or not. There are others who do, and they will get it. They will use it, and their seeds will blossom. Right. And then that's good. Because I'm planting seeds. That's what I'm supposed to be doing. As a child of God, I'm supposed to be planting seeds, helping other people to grow in something that I understand and teach somebody else so that they can win. Okay. So any questions? Let's see. JD David says, you just trade support resistance only. JD, I don't do anything only. I don't do anything only. It's like, do you only drive straight only? No. Are you driving straight maybe the majority of the time? Yes. But if a curve makes itself available to you, you turn the car. Do you understand what I'm saying? If I have to turn left, then I have to turn left. So do I trade support resistance primarily? Yes. But if I need to do something else, I will do something else too. That's called being knowledgeable and being flexible. That's why you have to learn the skill. That's why people who don't learn the skill are dependent on something else. And when the something else changes, they can't adjust. That's not what we want. We want to be like a bamboo, right? What does a bamboo tree do, right? The strongest winds can come. And what does the bamboo do? It bends. Right? In martial arts, you guys know that from an Eastern culture, the bamboo is very significant. Why? Because it goes with the challenge, right? It goes with the trial or the tribulation. Okay? So we have to be bamboo. So no, I don't trade support resistance only. Do I prefer it? Yes. In perfect scenarios, as you can see, we can just do support resistance. But sometimes I'll get into a trade where it goes the opposite way than I thought it was going to go for various reasons. Maybe it's news. Maybe it's market sentiment. Maybe it's some other type of analysis versus my technical analysis. Like I like to do technical analysis. This is what this is. So I go off the technicals. But sometimes fundamental can kick in. And if fundamental kicks in, then it kicks in. But ultimately, if you follow this method of technical, let's say right here, Nataki, let's say that you got in right here and news happened with the euro and the thing shot straight up through the roof. Okay. Isn't your stop loss right there? Okay. Yeah. So your stop loss is right there. And didn't you already assess that you'd be willing to lose 22 to gain 34? Right. Okay, so if price turned around and went backwards, you only lost 22 pips. Right. But you was already cool with that. You shouldn't be. Now, when we hit our stop loss, none of us like to hit our stop loss. Like, I don't want to make it seem like we should be hunky-dory about that. No, we're not happy about that. But at the end of the day, that was your tolerance of risk that you said you would be comfortable with. So if it turned around and hit the stop loss and went straight through the roof, Nataki should not be inboxing me talking about she blew her account. She shouldn't. She shouldn't. The only way she would blow her account is if she did not follow this process of setting parameters around her trade. If she's doing what I'm teaching her to do, she might be salty. Damn, I hit my stop loss. I really wanted this thing to go. Like she might feel a type of way, but she's still in the game. She should not have blown her account with that. And we would be moving on and find another trade. Simple as that. Okay. So hopefully that answers your question, JD. Ebony says I need to go back and watch this whole thing. All right. So Serene says this is good. Where do I get these tools? Craig, you can inbox me. This tool right here is just TradingView. This is just TradingView right here. You can go to tradingview.com and get a free account on TradingView with that. Okay. This right here, where I'm getting the signals from, this is through iMarkets Live, right? Through iMarkets Live. And so I can help you with that too, if you want to do that. But I'm drawing this up on this example through TradingView. But when I'm on this, for example, Nataki, when I'm watching the bounce back, like when this thing first came out, I did the same thing over here that I just did on regular TradingView. I don't have to keep flipping back and forth. You see what I'm saying? I just did the same stuff. I move all this stuff because I don't like all this different stuff on here, right? But essentially, I did the exact same thing over here, right? So this is all I did. If I were to recreate it really fast, hold on, right? If I were to recreate it really fast, what did I do? I came in here, I looked, I said, okay, this thing said 127117. First thing I do is I come over here, yellow line, I put it in at 127117. Oops. There it is. Okay. So I can see where I'm supposed to get in at, right? I can see that. Then I would say, okay, initially out the gate, I can see what my previous high is right here, right? I can see that 529, but I would go up about 5 pips. So 579, maybe 571, something like that, right? I could see that. Then if I'm looking left, just look, like I haven't drawn any lines, but Nataki, can't you see these levels roughly? Like see where it's going, like you can see it, right? So if I'm looking left, it's telling me to get in right here. I can see looking left that somewhere around here is where I would get out, right? So I will come in here. I didn't even draw support resistance really, right? I just see like kind of right in there. So that's my initial thing I'm doing. Fast. See how fast that was, Nataki? Fast, in and out. Okay. So now I'm like, okay, fine. That's a 4-hour chart, right? So now I come in here and I measure. Does this make, in other words, here's what I would do. This is the ideal scenario, but does this make sense for my account? Okay, let's see. Let me come over here. Price range, what I'm gonna do? From here to here, 45 pips.
It makes sense.
Right? Okay, fine. Then right here, let me come down. Let me see. I'm coming down here, 120 pips. Yep, makes sense for me. I look at, all right, so now I got to look at my lot size. My lot size. Am I going to trade a standard? Well, if I trade a standard lot, which is $10 per pip, am I willing to lose $450 to gain $1,200?
Yes.
Yes. And if you could lose $450 in your account without blowing your account, then go for it. Knock yourself out. Have a wonderful day. Make $1,200 in a day and a half or so. Right? That's it. You could just very easily do that. But you got to be okay with potentially losing $450. Don't ignore that you could lose. Don't only focus on what you can gain. Look at the relationship between what you could lose as it's proportionate to what you could gain. So if I have a $2,000 account and I want to make $1,200, right? And I want to do a standard lot, and I say, okay, am I willing to lose $450 out of my $2,000? And I could stand to gain $1,200 out of that. Then place your trade for one standard lot. I would get in on a sale at 127.117 at a 1.0 lot size. I would set my take profit at 125,909, and I would set my stop loss at 127,571. I would shut down the damn computer and I would go to work. Like, I don't understand what the problem is. Like, everybody's like, oh, I don't want to spend all this time from the computer. Who taught you that? I don't know where people are getting that from. It took us, what, 5 minutes to just go through this analysis, Nataki? I mean, if the trade comes out, it comes out. You click on it, you look, you put in your entry, you put in your stop loss, and you look for support resistance on that time frame, and you find your take profit. You just look at it, and then you do what? Measure. After you measure, then you assess your own account, and then you say, oh, shoot, no, I can't do no standard because I can't lose $450. Okay, then come down and say, okay, can I do $1? Can I do $5? Right? Can I do $1? Well, yeah, I could do $1. Could I lose $45 with the potential of gaining $120 today? Yeah, some of y'all going to work every day or part-time just trying to make an extra $100 a day. I just showed you how you could do that. This is one trade. Okay, could I do that on another trade? Yes. So I could make $120, but I might lose $45. But my likelihood is slim, right? My likelihood is slim. We're already moving this direction. But if I do lose, I got to be okay with losing my $45. That's the biggest risk you got is your $45. Don't over leverage this thing trying to make $1,200 and then you lose $450 and you didn't understand that the same dollar that you spend to gain is the same multiple that you're going to use to lose. Okay? That's it, guys. It took us 5 minutes. Either you're in the trade or you're not in the trade. It's real simple. People taking all day. I don't know. Okay? Now, of course, we could always refine areas, but this bounce back is really good because, you know, for the most part, you could just get in right there. Now, we do teach, you know, in the bounce back area, we do teach some making sure that this is the point to get in, right? Making sure like this price point, 127,117, if you want to be sure that's the price to get in, we teach how to analyze that. But this tool is so good that you could essentially just get in where it tells you to get in. You don't have to do the analysis on whether that's the exact point to get in. But for some of us, we like to analyze it all. I didn't go over that today. That's another day, another dollar for that particular strategy. All I'm showing is support resistance. Here's where this thing says get in. Put your line there. Find out where your stop loss will be. 3 to 5 pips above the previous high. Find out where your take profit would be, the next level of consolidation. And then that's it. That's it. Nataki, were you overcomplicating this?
Absolutely. Absolutely.
Why do you think that is?
I don't know. I have a tendency to overthink. And you know, I had an experience where I blew my account, so I was trying to proceed with caution.
Welcome to the club. Welcome to the club.
Right. So, I mean, you have just really simplified this for me. So it was truly a blessing to jump on here this morning. I love it. Thank you very much.
You are so welcome. You are so welcome. Okay, so let's see. I have a quick question. To start adding your ceiling and floor, you turn the candles off. Yes, I do. Right. So if I go back over here to this chart, I turn the candles off and I turn on the line chart. The line chart. And my white lines represent my support resistance lines. Yes, I do. That's correct. And you look for what points? You look for the points where you go back and watch the video. Okay, go back and watch the replay because I kind of went through that. But you go through and you look for where the points touch. Right? You look for where you have at least 2 points. So if I go right here, like I can see there's nothing, there's black space right here. So I come down to price. And if I were going to put another line right here, find another support or resistance level, I'm going to come down and I'm going to look, I'm going to say, okay, do I have at least 2 points touching right here? Yeah, I do. I'm going to put a line right there. It's touching right here. It's touching right there. It's touching right there. It's touching right there. There you go. That's what I'm looking for. If I want to put another one in, I can come down further, right? Because now we have all this black space right here. And I'm looking, okay, here's price. Look at these 2 lines. This point right here, if I put the line right here and look across, is it touching more than 2 points? Yes. It's touching here. It's touching right here. It's touching over here. It's touching right there, right? So that would be another support resistance. Like this doesn't stop. Like you can put this in, like I can put one in right here. Right? Let's see. Right there. Right? Wouldn't that be a line? Yes, it would. Right? Now that's probably it. Like there's nothing in between there. Like you guys don't just start making up stuff. Right? This might be one right in here because I'm looking at this. Right? See this right here? Right here and right here? Those 2 areas. And then it kind of touches right here. So I might stick one there, but don't make up lines. You're looking for like the highs and the lows, right? So here's a low right here, right? Okay. If I did like, here's a high, you see this right here, this is a high. It will swing down to this low. So here's a high. We got a line right there. Here's a low. Is this an area? Yes. Put the line there. Well, I got a point right here, a point right here, a point right here, right? So start there, right? So you start like from your low and go to a high. Then the next low, go to a high. Right? And then you'll see it's like filling in the gaps. If you see anything in between, then fill that in. But ultimately, you've got the majority of the support resistance levels already right here. Look, price is still hanging out right there, Nataki, right? It's still right there. Why? Because it's a level. Right here, it was a ceiling. You see that? It was a ceiling. Now right here, it's a floor. It's trying to decide whether it's going to bust through or not. Right? If it busts through, we're going to come down to here. If we don't bust through, what we're going to do? Go back up to here. This is why you get out right there. Because we don't always fully know. But if you're in this thing long term, you're not looking at it. You're down here. You see what I'm saying? You're not worried about the little nuances like this. If your goal is to wait until it's down here, you just let it work its way down here. You don't check it every 5 minutes. Just let it do what it's going to do. Okay, so to answer your question, brother, yes, you change your candles to the line. Okay, hopefully that helped you. He said he got it. Okay, great. So I think you guys got my point on today. Nataki, thank you so much for joining me on this and helping me to make this more of a little tutorial. Now, one thing we're going to do before we get off, okay, because I have a little motto that says inspiring you into action. Nataki, I'm going to clear this chart, okay? And now what you're going to do is you're going to now do this. Now, in fact, why don't you share your screen? Can you share your screen? Y'all want to see Nataki do this? She got to do it now. If I'm a teacher, that's what I said about wasting time, right? I'm not going to let her off. I got it. And then she get right off and be like, now what she say? I'm like, nope, show me. Okay. Show me. Okay, hold on. Let me stop sharing that. Okay, now Nataki, go ahead and share your screen. This should.
See, I gotta go to Trading View.
Yep, go to Trading View. John said, go for it, go for it, go for it. That's right, Nataki, you can do it. Y'all think Nataki can do it? Let me see, where about the support? Can Nataki do it? Can Nataki do it? Can Nataki do it?
Heck, I gotta find Trading View first, just a second, let's see.
Can Nataki do it? Let me see it in the comment section, y'all. Do y'all think Nataki can do it? Okay. Patrice says yes. John says yes. Shahida says yes, she can. Okay, hold on.
Let's see, did it work?
I don't see it yet. There you go. Okay, hold on. There you go. Craig said go. All right. So now you guys should be able to see Nataki's screen on here. Fred says, yes, you can do it. Nataki, you got some support out there in the marketplace, girl.
Thank you guys.
Okay. So pick whatever pair you want to pick.
Let's see what's happening right now. What are we in? We're in the New York session right now?
Yeah, we're in New York session.
Guess we'll do this one. Let's try this one.
Okay, UJ.
Okay.
Perfect. Now take that MACD off for the sake of this right now. Just so we can see it, so we don't confuse people. Okay, great. You got a nice clean chart right there. And go up to like maybe a 1 hour chart or something like that, or a 4 hour chart. John Justice said he got 62 pips off EJ. That's right. That's right. We made some money off EJ yesterday. Okay. So this is the 4 hour chart?
Yeah.
Perfect. So step one, what you gonna do?
I'm gonna go to the line chart.
Good. Go to the line chart. Awesome.
Okay.
Now what I would probably do is scrunch the chart in so you can see more of it. Come down to the bottom and go to the minus sign. There.
Okay.
Okay. So now start wherever you want to start, and let's see some support resistance get drawn in here.
We'll start here.
Okay.
So I'm gonna come over, get a line.
Mm-hmm.
And if we're starting, well, I can easily see like right in here.
Okay. All right. So do you have at least 2 points?
I do.
Okay. Next line.
I do. So I could actually, if I adjusted it a little bit, I think I will. Yeah, I do.
Well, I'll probably come back down though. You were probably more ideal. Yeah. Come down a little bit. Yeah. Because see, right there, you have, okay, go back up to where you were. About right there, like how you were, okay? If you go all the way to the left, you can see that you've got, keep going to the, no, not just your mouse.
Okay.
Go up a little bit to the left. Don't move the, yeah, go to the left, to the left, to the left. Keep going, 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 keep going. Okay, right there. See right there?
Yeah.
You got that point, right? Keep going to the right now. Come back to the right. Keep coming, keep coming, keep coming to the right. Keep coming. Select, keep coming right in there. Right in there. Like that W.
Yeah.
You got that point. Now keep coming to the right. See right there? Now you got a floor. Now keep coming. Now you got a ceiling.
Yeah.
Keep coming. Another one. Keep coming. Now you got a floor. You see? So there you go. Perfect. Next line.
Okay. Here's my line. I will come It's right in here.
Okay. Okay, let's see. Now let's make it a little bit more accurate. That's a good area, but either scoot up a little bit. Yeah, come down a little bit. Yeah, probably right in there.
Okay.
You see that?
Yeah.
Okay, that's cool. Right now, we can always go back and fill in. Remember what I said? We can always go back and fill in. But let's try to get our major ones in. Good. What's the next one? Okay, that's good. Next line. There you go, Natasha. You're getting good at this, girl. Look how quick you spotting that. Keep going. Y'all, is Natasha doing good or what?
Right, I'm holding my breath.
Breathe, child, breathe. Okay, I like that. Mm-hmm.
Let's go right in. Let's see. Yeah, there's a point. Bring it down. Right in here.
Mm-hmm. There you go.
Okay.
Well, bring it down a little bit because it's not that tip, right? You see? Okay.
Yeah. Okay.
All right. There you go. Now, click right there. Okay. Now move your chart. Scoot it over to the left. Okay. So now we still got some space in there some kind of way, right?
Mm-hmm.
So put the minus sign again because I can see that point sticking up right there. We're closer. Keep coming up. Keep coming up above that line where you just put the line there. Keep going up. Up, 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 right in there. See that to the right. See that point over there to the right?
Right here?
To the right. Yeah, see that?
Yeah.
That concerns me. So I'm like, price stopped right there for a reason. So I'm going to look left and see if there's something to the left that will allow me to put a line right there.
Yeah. Yeah.
Okay. So grab a line. You see what I'm saying? Like that line isn't sticking up there for nothing. Price stopped right there for a reason. And what is the reason? Let's find out. Oh, there it is. Right? We can see a reason over there to the left. Right? Right in there.
Okay.
And over there. Okay. So now I'm happy, right? We shouldn't have any of those major points just sticking out like that, right? A line should be there. Okay. Now come back over to the right. Scoot your chart back over to the left. Yeah. All right. So now if you come down some or go back up to the top, we can see that we don't have any lines up there at the top, right? Because that's current price. Okay. But we still have to find support resistance somewhere in there, right? So bring your chart down. Wait, watch your line. Hold on. Click out. And now come back up to the top, all the way to the top where your navigation is, to the left.
Okay.
To the right now, too far. Up at the top.
Okay.
Keep coming to the right, to the right, to the right, to the right.
Okay, okay.
To the right. One more. See that arrow?
Yeah.
Hit that. That'll put your line back. It's like a undo, like an edit.
Okay. Okay.
Okay. So whenever you're dragging your chart, come into the black space. Don't do it where your lines are because it'll move your lines.
Okay.
All right. So bring that chart down now. Okay. Come over here to your prices. All the way into prices. Okay. Come inside, right in there. Now hold your mouse down and drag up. Okay, let it go. That opens it up. For whatever reason, when you do that and then you come back into the black area, you can drag the chart up or down.
Okay.
So now come back over to your chart inside the black. Now drag it down. There. Okay. So now we can see that price stopped at the top of that where price is right now, right? So you got to put a line at the top of that where current price is. You see up there? Yeah, it stopped up there for some reason. Okay, adjust it a little bit. There we go. A little bit. There we go. Okay, so at least we got that, right? Now I would see those other little points in there. So I would put another line in there. At least where, yeah. Let me see if you're thinking what I'm thinking. Just go ahead and do what you're going to do. Come down here. Bring it down. Bring it down. Somewhere right up a little bit. Right in there somewhere, right? Okay, you see why though? Open your chart up, come down to the bottom and hit the plus sign. Okay, now drag your chart back over to the right. You see why we put a line right there? Do you see 2 points?
Yeah, it touched there.
Yep.
Right here.
Yep.
Right here.
Yep.
It went through here.
Yeah. Okay. So there we go. All right. So now we've got some decent support resistance inside of here. All right. Now go click back over to your candles. There you go. Now look how price is kind of respecting each of those stair steps. You see that?
Yeah.
It's respecting each of those stair steps. So let's just say, for example, this is the 4-hour chart. Let's just say, for example, that you were going to, let's say we call the trade, we call the buy. Okay, let's say we call the buy. And we said buy at 110.343. Okay. We said buy at 110. So come over. There you go.
Get my line.
Yep. Make it a different color. Johnny said, I was under the impression that we should always draw support resistance on the daily time frame. Johnny, you draw it on the daily to get the overall perspective. That's the overall perspective. But you can always come down to smaller time frames that is going to help you fill in the gaps, right? It's like, I want to know if I'm going to drive from Atlanta to Dallas, Texas, I want to look at a map and I want that map to tell me overall, what direction am I going? Overall, I'm going to be going west. Okay, I'm going to be going west overall. But when I leave my house, immediately when I leave my house, do I just start driving west? I might not. I might have to come out my driveway. Then I got to turn north first. Then I got to go east a little bit, right? I got to do some things to then get to the highway. Then when I'm on the highway where I live, I might need to take 285 first, right? And I got to go 285 south. Okay, I got to go 285 south until I get to 20 west. Then when I get on 20, I can go west. So I know on the daily, I'm going from Atlanta to Texas. Overall, I'm going west. But if I need to come out of my house first, I might have to come down to the 15-minute chart. And at the 15-minute chart, Johnny, I've got to figure out where my support and resistance is on the 15-minute perspective, just the same. Okay, just the same. So you can draw support resistance on any time frame you want, but the daily is where you're going to go to start your process, to start the process overall. So you know what this pair is doing overall. Okay, hope that answered that. All right, so Nataki, so we're right here. Let's say, okay, 332, that's fine. So with 332, let's say we're going to start, keep going to the left, get you a vertical line, just so everybody can see it. Okay. And put it right here. Come to the right. Not that far. Down where the candles are at that line. Okay. Come over. Yeah. Put a line right there. Okay. Perfect. So let's say, now move your mouse out the way and click. So we don't see that circle. Well, don't click the circle. Click outside. There we go. All right.
Okay.
So now let's say Nataki is going to get in this trade at 110.332 for whatever reason. I don't know. You called it. You saw it yourself, Nataki. A swipe trade came out. I don't know. Bounceback came out. Harmonic scanner. Whatever reason, that's the price that you're going to get in. Okay. And you're going to buy. Okay. You're going to buy. Now, Nataki, what we're going to do is we're going to identify our take profit first, right? So what do we need to look for?
We're going to go and look for, oh, shoot. Oh, the high. The
previous level of support resistance, right? Mm-hmm. So previous meaning before. So before we got in right there, where was the level that the price where was this consolidation at of price prior to us getting in? Now we're buying, we're going up. So where was price at before we got in where it consolidated? Before we got in, because all that's not there yet. Don't go too far. Where you going?
So we can say in here.
Well, that's what you're buying at down there. So you're going to go up. You're going to go up to where?
So this is where I am, right?
Yep. And so, yes.
Around this area.
Yes.
Previous high. Okay.
Do you see that?
Yeah.
So now what you would do, Nataki, is you would make, what's that, like 110.017? That would be your take profit.
Okay.
So put the green line right there. Or just make that line green. It doesn't make a difference. You can just keep that line right there and just change the color. So yeah, there you go. Perfect. You see that?
Yeah.
So now you're in right there, Nataki, and you're going to go all the way up to the green line. Okay. Now, where would your stop loss be based on the previous low, Nataki?
Based on the previous low, that's my entry. I'm going to go down to the next support and resistance.
There you go. Okay, so your previous low. So where's the lowest point right in there?
The lowest point.
You're going too far back because that's the low over in there. That's the floor. So right there. See that wick? Mm-hmm. So that wick would technically be your lowest point.
Okay.
So you're going to put a line 3 to 5 pips below the. Mm-hmm. So go ahead and put a red line right there. You got it, Johnny.
So if I'm going 109.62, I'm going to go down about right. Gosh.
What is it at? So let me see. What's that? So that's like, what's the bottom of that wick? Go down. So about, go up a little bit. So it's probably like what, 5.7 minus 5. So like 5.2.
Okay. And I will put a red line here.
Yeah. And make it 5.22. Like that's fine. 5.23. Yeah. Okay. So you got to have it at below that line. You can't have it exactly at that. Okay. All right. So now, just looking at that, now we put in what the ideal situation would be. Now you have to ask yourself, does this make sense? So now let's measure.
All right.
So where you get in, so come down. So okay, up a little bit. 2 more, 1 more. Okay. Now click on the arrow next to it. And then go down to where it says price range. Yes. Now start on your yellow line. And then drag up. Drag. There you go. Drag up to the green. Where's your, you know what you need? Come out of that. Okay, that's fine. But I need you to go get your crosshair. Click on the black area. Okay, and go up there to where that arrow is at the top. Yeah, take that off and get the cross. Yeah, because see, we can't see there.
Okay.
Okay, so there we go. Because you want to make sure that your horizontal lines are matching up with your green and your yellow lines to make sure that's the real thing. Okay.
Okay.
So that's about 67 pips. Okay. Now go over there and get the price again, the tool, and measure from the yellow line to your stop loss. Click out. Oh, that's fine. You got it. That's fine. Leave that there. Go back. Put that back. Put that back at the yellow line. There you go. Okay. Now that black, come down here where you got this other line at. You got to click. Every time you do something, you got to, you could, that way you deactivate whatever tool you were just using. Now come back over to where you got this 51.7 thing. Get this out of here. Now what you can do is grab that bottom circle. There you go. Grab that circle and drag up to your yellow line. There you go. And just kind of make it come closer, come to the left. So we don't see that gray area. Come to the left. Left. Your other left. 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 Keep coming. Keep coming all the way. So it's just like a little line. Okay. Go back to the right. There you go. This is like there you go. Okay. Now go up to the yellow line. There we go. Okay. So now, Nataki, what's your risk? Let it go. Okay. And come and click and deactivate. There you go. What's your risk, Nataki?
So I'm looking at, what is it, 69 pips?
That's your reward.
Yeah. And then, so my risk is going to be 81 pips here.
Right. Does that make sense?
Not to make 69 now.
Exactly. So we need to change something, don't we?
Okay. Right.
Okay. So now let's come down because I'm confident in our take profit. Right. What I want to do is minimize my risk if I can. Right. I don't want to take away my money. Right. I want to keep my 70 pips. What I'm trying to see is if I can reduce my risk to get my 70 pips, because my 70 pips look solid because we at the previous level of consolidation. So I'm confident in my take profit. What we don't want is to lose 81 pips trying to get to 69. So we're at the 4-hour time frame. Come down to like the 15-minute time frame. Okay, now you got to scoot over because now prices, we zoomed in a lot. So come to the black, make sure you don't move one of your lines. Okay. So now you have to move over, probably drag to the other way. Because you're all the way above your, Come in and hit the minus sign. Keep going, keep hitting it, keep hitting it, keep hitting it, keep hitting it. Okay, see, that's what we got in at, right? Okay. So now move that whatchamajiggy. Move this 69.4 thing out the way. Okay, because we know that's 69. You can delete it if you want to delete it. Okay. Or you can just move it somewhere else. It's fine. And just hit there you go. Okay, how about just delete it? Because now it's in the way. So click it and then hit the delete.
Where's the delete button?
On your computer.
Oh, okay.
Well, click it first so that the circles pop up. Or click it on the corner. Click it on the side. There.
There we go.
Okay. All right. So now you see where our yellow line is?
Yeah.
Okay. Now we don't like that red line all the way down there, do we?
No.
Okay. So now if you start at your yellow line and you come down slowly, right? Where would the previous low be prior to you getting in? Look to your left.
Prior to my getting in.
Yeah. Come back. Come back. Okay, go up. Is that a low right there?
There's a low here. Yes.
Okay. Is that lower than where you got in at? Is that a point?
Yes, it is.
Okay. So move the red line up to that low. Come down below that, 3 to 5 pips below that, right? So you might need to use the plus sign again to open it back up for us so we can see it better.
at work. So
okay, yeah, that's fine. All right, so now if you move the red line, so where is it? Like right at the bottom of that point, what is that price?
It is 110, like, yeah, 110.
Okay. Okay, so then subtract 5 and come down. 110, 117. So 11 is what? 06? 06, 067?
Yeah.
Keep coming. Keep coming. So about right there.
Yeah, right here.
Okay. Now, measure that.
I'm going to go for my entry.
Okay. Drag down.
To my stop loss. Going to be about 25 pips.
Okay, now click and come out of that. Or well, you keep it at your 25 pips, so you know that's what that is. Drag it down. 25 to that line. Okay. Now click out of it. Okay. So now from our take profit's about 69 pips, right? And our stop loss is how much?
25.
Would you take that trade?
Well, I would be I'm still making a profit, a slight one, but I'm still making a profit.
Girl, yeah. I mean, it's like you almost at 70, right? You almost at 3 times. Right? 25 cents. And then you make 75 cents, right? That's 25 times, almost 3 times your potential loss. So that's like a 1 to 3 almost. Right? We don't have 75 pips, so to speak, but we got like 69 pips or whatever. But that's a good, remember we said we want at least 1 to 1, right? 1 to 1 would be if I lose 25, I gain 25. But you're not gaining 25, you're going to gain 70. That's good, Nice Hockey.
Yeah.
So would you risk 25 to gain 69?
I would.
Yes. So you would enter the trade, you would get in on a buy at 110, 324. What would your stop loss be?
My stop loss is going to be right here. Let's see, 110, 663. That's including my 5 below.
So it's 110 what?
110, 06. I need glasses, Tracey. I think this is 8.
068, right? And then what would your take profit be?
My take profit is going to be up here at the green line at about 111.
Well, move the cursor out the way. Move the cursor. Now just look to the right. What's that green number say?
111,017.
There you go. See the number of your line, the color of your line that's what the price is, right? Okay. So you can just look up on that line over there and you can see your yellow number is 110,324 where you got in. Your red number is 110,068. That's your stop loss. And your green number is 110,017. That's your take profit. Okay. So let's see what happens. So we got in right here at this red line. Now keep going to current price. And let's see, do we ever hit either our green line or our stop loss line? So just drag it the other way. There you go. Boom. We hit it, didn't we? Put the red vertical line where we hit the green line at.
So the red vertical.
Yeah, go back to the way you were, the tool. Go back to the tool. Okay. Yep, get you a vertical line. Okay, now put it at the candle where it crossed the green line, where you hit take profit.
Like right in here.
Did you hit the green line right there? Vertical. Up and down, up and down. What candle hit it? Cross the green. There, keep going. Over to the left. Bring it over, Nataki. Where it first hit the green line. Yeah, right in there. Move the red line back over there.
Right in here.
Like one more candle to the right. That width.
Right here.
Okay, fine. Perfect. Okay. All right. Now, click out of that. All right. Now this is on a 15-minute chart. It's a lot of 15 minutes in there, right? So let's go back up to the hourly chart or the 4-hour chart. Whichever one. Don't make a difference. Now drag it down. And then drag it over to the right. Yeah, move it over to the right because we got in over there somewhere. And go to our, oh, there we go. Yeah.
Okay.
Now hit the plus sign so we can open it up. Okay. Now move it over.
We can see. Okay.
Keep going, because that was where we got out. Keep going to where we got in at. There. Okay. So now, this is a 4-hour chart, right? And potential, did we not hit our take profit?
We did.
Okay. Now, look at all those candles in there, though, right? So that's what? Oh, we got in right there. So that's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, Lord. 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30, 31, 32, 33, 34, 35, 36, 37, 38. It's 38 candles. But really, if you look at this, this is consolidation, really. It's just an example we picked, right? But that's because it's going sideways.
Okay.
Okay. But it still hit where we needed to go. But here's the point that I want to make. That's 38 candles. 38 candles times 4 is what? 30. Let's see. I don't know. Let's see. Where I need a pencil. Hold on. Somebody that's smart can know that real fast. I ain't that smart. 38 times 4. So that's 2, 3, 12, 13, 14, 15. That's 152 hours. Right? So 152 hours divided by 60 is what? A little less than 10 hours?
Yeah, 2 hours and 53 minutes.
10 hours? Okay. So let's just say 10 hours. Okay. Let's just say 8 hours. So Nataki, you get up in the morning, the signal comes through, you do this little analysis, you put your trade in. Now you'll get faster as you go. Like we can't look how slow it's going now because you're just doing it. That's what everybody got to understand. It's going to be slow right now because you're getting in the habit of doing the process. But once you know the process, you'll get faster, right? So you get up in the morning, you see a signal come across your phone, you say, oh shoot, you do this analysis right here, Nataki. You set the parameters and you go to work. You drive to work, an hour to work, you at work for 8 hours, you drive home another hour, you turn around, you go grab something to eat, you stop at the grocery store, whatever you do, you come home, you open up your phone, and Nataki, you done made 70 pips. Now, if you did a standard lot, that was $700.
Right. That's more than I make in a day. So it's awesome.
Do you see what I'm saying?
Yeah. You
made $700 on a standard lot. If you did $5, right? It doesn't have to be a state. If you did $5, that's $350. Right. Does that help everybody understand what I'm saying? $350. If you did $1, that's $70. That's still more than what people are doing part-time. You see what I'm saying? In a day for not doing anything. How long would it have taken you to do that? It took you, once you get good, Nataki, 5-10 minutes to set this up. And basically you made $70 because of 10 minutes of work. That's what people got to understand. How can you not want to learn what it takes to make $70 in 10 minutes of work, 10 minutes of work? Right now, it might take you longer than 10 minutes, everybody, because you're learning. But once you learn it, like driving a car, like riding a bike, like cutting on the boob tube, like being a parent, once you learn how to start doing it, it just becomes part of your everyday life. It's not that big of a deal. And you can do this on any pair you want. And as your account gets bigger, Nataki, now let's think big for a second. Now your account, you've grown your account to, let's say, I don't know, $5,000. Okay, you grow your account to $5,000. And now let's just say you want to do 10 standard lots. Oh, let's say it's at $10,000 just to keep it, because some people are kind of like risk management kind of freaks. So let's say it's at $10,000 and you did this 10 minutes worth of work and you did 10 standard lots. 10 standard lots is $100 per pip, right? So you just made 70 pips times $100. That's $7,000. Some of y'all were like, oh, I want to start with $10,000. I want to start with $20,000 because you have that set aside, or you might have a savings account of some sort or whatever. And y'all don't want to learn how to make $7,000 in 10 hours, 10 minutes of work while you go live your life. You know what, Nataki? I can't even, it give me a headache even thinking about it. I see it. I see the vision. You understand what I'm saying?
Yeah.
I see that from that yellow line to that green line, Nataki, can change somebody's life.
True.
I see life changing in that width. Some people just see lines and candles, and I see freedom. I see freedom. From yellow to green, somebody could have made $7,000. Somebody could have made $700. Somebody could have made $70. And when you're first learning, maybe you made $7. But I got nephews and nieces that's making $7, $8 an hour at the damn mall working. So it's relative to everybody. If I could show them how to make $7 in 10 minutes, they could quit their job part-time trying to get 4 hours and put $20 in their gas tank. A college student that can't work a job because they got a heavy school load. What would you be making if you went to the mall and made $10 an hour? Well, hell, you just made $70 for the day while you was at class. And what if you did that every day for 5 days that the market is open? One trade. You did that every day for 5 days. $70 times 5 is $350 for the week. That's helping some grown folks, but I dang sure know that's helping some college students. It's helping some, seniors in high school. I dang sure know it's helping them. So you can't discount this stuff. It's worth the practice. It's worth the late nights. It's worth blowing the account, Nataki, because then you say, okay, how do I do better at this, right? It's worth all of that because that little distance between that yellow and that green line can change your life. Right? So now, everybody that's on, hopefully y'all got some value today in 2 hours. In 2 hours, all right? So Nataki, is there anything that you want to share with everybody now that you've seen me do it and now that you've done it yourself? Anything you want to say to anybody that's watching this?
Well, I tell you, the hands-on practice and the in-depth explanation that you gave was really helpful. Now, the only thing I think that is really going to solidify this for me is going to be practice. Mm-hmm. Because, the more that I practice, the more I'll be able to get in here and navigate and trading view and draw these lines and be able to visually see these touch points that where I need to place my lines. That's going to help me tremendously. So, and I can't thank you enough for the time. It's just funny how, like you said earlier on this live session, that we came together this morning because that was not my plan. But this is something I definitely needed. So I thank you so much for it. I will definitely replay this over and over again. I'm going to join Judy's class on Monday and Wednesday evening. And these tools are just here to help me. So I can't wait to do this. And I know from the recent convention that you guys attended, there's some great things that's coming out. And I want to be a part of that. So in the meantime, I'm going to hop off. I got to get dressed and go to my corporate job. But in the meantime, I'm going to practice this so that I can get free of that. But thank you so much for the one-on-one training today, Tracey. I appreciate it a lot.
Oh, you are so welcome. You are so welcome. So guys, you're getting a whole bunch of love and hearts and likes, Nataki, on here. So guys, listen, this is the way this works, okay? So what we're going to do is go ahead and close out. Be sure to watch the replay, okay? Watch as many times as you need to watch it and just do what we went over here. It's nothing more. Like, you can't inbox me, ask me a bunch. Like, I gave Nataki everything that needs to be done. Just watch it over and over and over. Watch it, study it, practice it, pause it, play it, go back, hear what you thought I didn't say or what you thought I did say that I didn't say. Like, figure that out on your own. But this will get you going right here. This will get you going, right? The only thing you really need at this point is to know when to get in, right? And that's what our Markets Live, we got so many tools that tell you when to get in. Like, I don't even understand why it's that hard. Just get in when they say get in and get out the way I just taught you to get out. And then that's just that. All right. So Nataki, have a good day at work. Guys, I am out of here for the rest of the day. I'm gonna see if I can find me some trade. Well, no, because it's past my time, 12 o'clock. I don't really trade at this time, but I'll find something else I got to do. And happy trading, everybody. Bye, guys.